All right, well, good morning, active traders, and welcome to our live broadcast today on Saturday, December something, 3rd or thereabouts, right? Anyway, good to see y'all here. We've got an action-packed session lined up for you for our Trading Week Ahead broadcast. Markets have been hot lately, right? We've had some really good volatility to work with. That's likely to continue. We had Fed Chief Powell on Wednesday and our unemployment numbers and GDP and whatnot late last week, and we've got new plays coming up. So let's start off with our charts and see where things are headed. They've been up as of late, but we are still at the edge of, we're at the upper bounding box of a downtrend. So the two key technical levels to look at on the resistance side is right here now. That's the upper bounding box of the channel. That's really important. A lot of people will jump the gun, and myself included. I bought a few things yesterday for swing trades, and I'll go over those in a minute, but very small size until we get over that resistance near 4110 or thereabouts, okay? That's one key resistance area. The other one that's more important would be a break of the downtrend, and that's only going to occur if we get over that 4300 mark. So about 4120, 4300 or S1, R1 and R2. S1, I would use actually just the 4000 because that's a key pivot level for market makers. So S&P 4000, we got over that a few days back, and we've held over that. So 4000 and above is a long bias market. If we lose the 4000, fade back to cash or go into our inverses. Hey, good morning, everybody. Hey, thanks. I appreciate it, John. Hey, thanks, Scott. Trying. Oh, thanks, Stan. Hey, Lou. Thanks, people. Appreciate the kind words. Just fun playing a little horn. Keeps me out of trouble. Now here is the VIX. Bum, 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 bum. What's the most likely thing to occur in the VIX? Unlike the Chicago Volatility Index here, CBOE Volatility Index, unlike regular stocks that when they go down, they usually keep going down, what does the VIX do? Unique among all instruments in the entire known universe. What does our CBOE Volatility Index do? What is it known for doing? What does it do? Reverse, bounce, right, bounce, rebound, exactly. Yeah, the market always goes up. The market goes up and down. The VIX always cycles up and down 100% of the time. That is a fact. The volatility index will never stay down. You can knock it down. It doesn't stay down forever. It always bounces back up. And we were at the tail end. We're right before, a day or two before the rebound in the VIX. As I said, remember last week, I said correctly the market was likely to kind of chop around this past week, and that's true. I expect major selling in the market the second and third week in December, and the VIX will absolutely be back over 23 by third week in December. I would bank on it. I would bet on it because I'm a pattern day trader and a swing trader. I know how the market works. So every time the VIX goes up, it goes down and goes up and down. It's like a sawtooth, right? Or a sine wave. Now, what do you notice about the lengths? I'm not going to draw lines here, but how far does it go down before it bounces? How far does it go down before it bounces? How far does it go down? There's not going to be a exception and it'll just keep on going down forever. No, it will bounce too. The cautionary tale is a word of warning. You do not want to go heavy into stocks right now, or at least I do not. I'm not making advice or recommendations. I'm just telling you what I'm doing. I am nibbling. I'll go over a few of the stocks that I bought yesterday for a overnight play, but with the volatility index suppressed and about ready to pivot back up, now is not a smart time to go directional volatility long in the markets. Now is a good time to take your money and run or tighten up trailing stops on current positions you're in because the volatility index is going to go back up within a week or two at the very latest. I would expect next week we'll start to see a bounce no later than Wednesday. Keep an eye on the VIX to see if we break the 23 is a major resistance area. Any whole number on a bounce over the 20, 21, 22 is a sign the VIX may be coming back to life. So when it goes up, the market goes down and vice versa. So with this down as far as it ran exactly here, we're pattern traders. You have to be intelligent enough to make money as a trader. At least the way I do it is I look for patterns to repeat themselves. And like with a bell-shaped, normally distributed curve, it's not going to be 100%. You're going to catch most of the variance with these patterns. It's not going to be to the penny or to the dollar or to the dime, but you will have a rough, actually pretty close, but rough estimation of, from a pattern standpoint, what's likely to occur. So that's the most important thing I'll tell you this week is how to trade the market. It's not to go heavy into equities unless the market gets above one of those two previous S&P levels I mentioned, or if the VIX stays under 20. But the instant the VIX pokes its head back over 20, and especially over the 22, 23, you want to go to cash. Remember I said that. You'll thank me in a week or two. You'll see the VIX will be back up at 28 and people will be, how did that happen? And they'll be blaming various things out there in the economy and I don't know, a rail strike or whatever. There'll be something and the market will go down. So be prepared for that. That's an intelligent trader's approach. Now, what else do we have? Let's take a look at some charts that have been hot lately. And do give me your best charts. If you have any charts you'd like me to look at, I'll definitely help and give you my take on them. Feel free to post up to one or two. Wow, I got a big turnout. Hundreds of people. Limited to one or at most two tickers. Please don't give me like 8 tickers per person because I don't have the time for that. But I'll give you my best shot. And before we do that, let me just a quick commercial announcement for the next 2 days only, and I'm not going to extend this. I never do. I will offer the live room with me for a whole year for just $9.97, and that's a price that I've not offered in a long time, and it's a really good deal. It's more than half off the regular rate now, so you can get with me for our live trading room, and you can see if you've been with me for any length of time, you know how accurate my calls are, and I'd give both day and swing trading, stock and ETF picks. Usually between $10 and $30 a share, $10 to $40 a share. That's I don't like the $3 stocks, even though I do cover them on occasion, but in general, most of the alerts are for stuff between 10, 15 and 30, 40, that range. That's a good sweet spot for active day trades and swing trades. So we'll cover that. Anyway, that link is at trademastery.com/cyberweek. Trademastery.com/cyberweek. All right. Anyway, back to our program here. If you want to short Bitcoin, you do want to buy BITI on any show of strength. I do expect that BITI will continue up as Bitcoin collapses due to FTX contagion, or what do they call it? Contagion, I guess is the right word. Anyway, on with charts. EXTR, really good directional up chart. We covered this one earlier for you. These are holdovers from a couple of weeks ago that I alerted, or that we covered here in the Saturday events together. These are really strong charts. In this market, you owe it to yourself to only trade the best and the brightest, the more intelligent, strongest price action charts that keep going up in a 45-degree angle. Don't fool around with iffy, haphazard charts. In this market, it's a high vol market, high volatility market. You really want to reserve your capital for the best and the brightest, the best looking charts out there. For those of you who are familiar with me, what's one good signal in the GPS chart? What's one recent signal that tells me I'm bullish on Gap stores? GPS. Not the clothing, but the stock. What's a recent show of strength in GPS? A wide range candle yesterday, right? What you want to look at, a visual chart pattern technique that can be of great help to you in deciding whether or not to trade something, is to look at the recent week worth of, the last 5 trading sessions worth of daily candle charts and see what the height of the range of the charts of the days tell you. This tells us a lot of indecisiveness in chip chop. We had a shooting star, we had a doji, another doji shooting star, and then a doji Thursday. But then we had a large green candle on Friday yesterday. So we had some show of strength in GPS. So the pattern to look for is, this is one of many patterns I teach traders professionally in my live trading room. And you'll learn as you work with me in the room once you join as a member. And all of you are members, a lot of you here, you know how good the training is. Point is, you're looking for deltas. As a trader, you're looking for extreme charts, rock star charts with big ranges, and you're looking for changes or shifts in momentum. That can occur with both price action and volume, right? That's all we got. We got price action, we got volume. That's the main thing. And the main thing is range, the price action. So here you can see we had a series of ambivalent days. They didn't know what the heck they wanted to do with it. They just chopped it around. But all of a sudden, it lit up. And we had a big wide range green day yesterday in this chart. So if it gets over the 15 by any amount, like 15.2 or 15.3, up above that, not a trade recommendation, but keep an eye on this if it gets over, say, 15.20 in GPS. Now, even more important than an entry is what? making money. And the most important part of making money is not losing a lot when you're wrong. Where would you guys trail a stop? Let's say we buy 15.2 on Monday. Where would you trail a stop? You make the call. Where would you trail a stop on this? Let's say you just do 500 shares. You buy 15.20. Where would you trail a stop on this puppy? Bad traders would say something down like 10 or 11. Well, I shouldn't say bad traders, but inexperienced traders who lose would be saying something really big. Good traders always have extremely tight stops. I use what I call micro stops, or very tight stops, designed to be kind of the sweet spot to avoid getting shaken out, but avoid taking a larger than necessary loss. So right under the threshold of shakeoutness is the size that I use for stops. I would use no further down than 14, whole number. On this chart, I'd buy 15.2. I would sell half if it got down to 15. I'd stop out with half of the position at 14.5, and I'd capitulate and sell the balance of the shares if it crapped out and went down to 14. On the flip side, now let's say we're happy days and it works out and actually keeps going up like it has been the last couple of months. We buy 15.2. Next thing we know, it's at 15.8, almost 16. What do? Well, you feed the winner. So you scale in, you add more shares, you buy more shares. Once it gets over, that whole number is 16. Like it's 16.2 and 17.2 and so forth. So having a game plan to map out visually where you're going to trade charts intelligently with both the entries, your stop outs, the second chance trades, and the rest of it is something that can really help you get more clarity and more simplicity and more ease in your trades. But it starts with the best charts. And from there, careful risk management. And then from there, scaling to amplify wins. To leverage. Okay, DH2 is a nice chart. I'm not going to go through these in any great deal. Big green candle, flex, big chart. I had a big green candle day on Wednesday, did a pullback. Remember too, after an exceptionally large day or an exceptionally large candle, you usually get a pullback or a flatter, smaller candle. Over here on the far left of the chart, big candle day, flat candle day, big candle, flat, big flat, big, that's sort of flat, big flat, big flat. 100% of the time, and I just eyeballed this chart just now off the top of my head, but 100% of the time on this chart, after every large green candle, wide green candle, there's a flatter candle. Learning how to leverage that knowledge or how to take advantage of those patterns is something I teach in the live room. So something else you may want to join for. Let's see, Meta. I'm bullish on Facebook if it does light up here. I liked it over the 100. That's where I first called it for live room. It was at 102. Remember, guys? I called it for a swing at just over the 100. Again, I like whole numbers. I like round numbers. Places that are likely to attract new capital to make winning trades for those of us who are short-term traders and active day traders. So I called this at 102 for a long for my traders. Now it's up at 120. And it looks good. Now it's pierced the previous support level. If you draw a horizontal line from that bullish engulfment right here, we pierced right above it. So for that reason, it is a long here, anywhere up here over 125, 130. So keep an eye on Meta and see if our Facebook play faces higher prices, which is something we want. I like Peloton for a bounce. I bought some yesterday. I bought some earlier too, but I bought it again yesterday. Anyway, Peloton is a really nice uptrend, PTON. Peloton, from 7 to 13, it almost doubled in 6 weeks. Almost doubled, almost 2x in just a handful of weeks. Up and down though here, but lately it's getting a lot of buyers, so we want to keep an eye on Peloton. I also like Roku. I'm not only a customer, but I'm a shareholder. I just bought some for the first time in my life yesterday. I never owned Roku before, but I think it's come down a long time, and for a long ways. And it's starting to form a consolidation base here, October, November. It's slightly going up, nothing dramatic like Peloton, but at least it stopped selling. So this thing had been this is one of those high flying techs that came down. Now, if it's just a dead cat bounce or it's a big recovery, time will tell. Either way, we play it intelligently. On spec, I expected to play about a little bit of Bed Bath & Beyond because it's at 4 up days in a row. Anytime you have a stock with 3 days in a row, green, taking out new daily highs or longer, 3 days is kind of the Wall Street magic bullet. When you see 3 green days in a row with increasing price closing at new highs like this did, this is 4 days in a row up. You notice, please, the close of each of these previous 4 days in Bed Bath & Beyond has been up. So it's a meme stock. You know, it may be WS Beers may spike it to 8 or something. That's fine. If I buy 4, I'll sell 8. If I can double my money, I'm a happy camper. It was 8 just a few weeks ago, so we'll see. And much higher earlier than that. So I like Bed Bath & Beyond for a bounce. I also like meme stock AMC. For the first time, I'm trading this thing here lately. AMC's starting to bounce. It did a nice bounce back, November 10th. Went sideways the last couple of weeks. It went up, kind of cycled down. Now it's going up again. So now I'm getting on board, and I will buy some. I will aggressively get in if it breaks the 10 value up at, say, 1050 or so. So that's another good example of a recovery chart on something that had been sold down. Now let's take a look at some day trading charts, and then I will open it up for your guys' tickers. Wow, a lot of them here. Let me start typing these in. Yeah, I like Zoom too. Thanks for the reminder. That's one I was going to buy, and I forgot. We're on Zoom. Yeah. Thanks. That was the other beaten down tech I was looking for. I know I don't trade futures. Let's see. If you guys posted tickers earlier, oh wow, a bunch of them. Go ahead and repost them if you want. Trying to keep up here with you guys. You guys are moving fast here. So if you have any tickers you'd like me to pull up, let me know. Yeah, I bought some Tilray and Canopy yesterday. Pot stocks are on a bounce. That's another sector note. Cannabis stocks are a buy. I like the 3 that I trade. I used to trade like 7 or 8 of them. Now I just trade Canopy, Tilray, and Sundial. But there's a bunch of them out there. Thank you for the tickers, folks. We'll look at those momentarily. But anyway, Tilray looked great yesterday, right? Foshizo, boom, flawless victory. Anybody else trading Tilray yesterday? I was. Tilray lit up. I called along for my members. Oh, by the way, this is really important. The most important part of today's broadcast is what I'm about to tell you. Unlike everyone else that runs a room, I'm actually really fucking good at it. And I give specific triggers posted ahead of time for specific prices for paper trading use only to go long in. So for example, Tilray back when it was down at 4 on that pivot, actually right under 4, right near 398 or something, right near 4, I said, we go long if it gets over the 4.2. And you can see it ran all the way to 4.7. So 50-cent run on a $4 stock, not too bad. I called Peloton at 12.3, Canopy Growth at 3.9. Anyway, and I did have 3 stops on the inverses didn't work out too well yesterday. So the SQ, SOXs, and UVXY, those 3 triggers would have produced stops, but the other 2, and also AMC. So I got 4 stops and 1, 2, 4, 5, 6, 7, 8 wins. So I had 8 wins and 4 stops in the alerts on that table from yesterday. So my members got all those. So 2-to-1 wins, not too bad. Anyway, those are the example of the types of charts that we focus on. So for example, Peloton, when it was under 1230, I said we go long if it breaks 1230. Now, I didn't alert people earlier. Again, this is a good example of a 2-day whole number strategy. And the 2-day whole number strategy is charts over here yesterday, and if we have a whole number kind of lurking here and it's somewhere near that, we go long if it breaks above the whole number. In this case, it broke over 12. I didn't call the long right over 12 because I was a little cautious because the market had been kind of choppy. So I said, let's wait for this thing to get over 1230 before we go long. And so I issued a buy alert back when it was like 1180 or something to go long if and only if it gets over 1230. It ran up to 1330, $1 win, or up to $1 win if anyone took it. Okay. So those are the example of the kind of charts. One of my favorite recent ones I've been trading, actually I trade this thing for months, but are inverse natural gas cold. I also trade BOIL. Kind of funny. BOIL is long natural gas, cold is short natural gas, and they trade exactly opposite of each other. Anyway, this one I called long and traded it. Long call was 1630, and you can see it ran from there to 17-ish. So that's another win. So do you think that's helpful? I give people these specific alerts ahead of time, and not too many, like 5 or 10 or whatever, maybe just 7 to 10 or 7 to 12, but a handful to look at on the day's hottest charts. And oftentimes, some of the best charts of the day come from my members, because I have a lot of really smart members. I have so many hundreds of people, and many of them have been with me for a lot of years, and so they know what to look for. And a lot of time, they post really good tickers that are often better even than mine. So we've got a big community in our live room. And unlike other places, we do not post front-running, low-float, thinly traded game of whack-a-mole. Let's see who can buy the thing first and dump it. Like other dishonest, other people who run live rooms who are not honest, they say buy low-float, thinly traded, under $10 stocks. Epic fail. That's for amateurs who blow up their accounts. You will not see anybody who trades under $10 stocks with tax return proof that they are profitable for any length of time that I've seen, at least. So if anybody claims to be making $100,000 in a YouTube video, don't believe it. It's a lot of hogwash. And that's, unfortunately, the regulators step in. But the point is, learn from me. I know what to teach you guys. And these are the kind of charts I trade myself. I'm currently long Peloton, Tilray, Canopy. I didn't buy NEO. And let's see, and I don't think I bought AMC yesterday. I may not have bought AMC because it wasn't up. I don't recall offhand. I know for sure that I bought Bed Bath & Beyond, Shop, Roku. I didn't buy NEO, I know for sure. I bought Canopy, Tilray, and Peloton. Here's that Canopy growth chart. That's a really strong showing from pot stocks, which historically have been really kind of dogs to trade. But hope springs eternal. Someday they'll light up and continue to race. And I don't know what the news was that sparked the high prices in cannabis stocks yesterday. I don't really care about the news. All I care about is price action. I'm a trader. I'm not a talking head. But it's going up, so I buy, right? So if it takes out a 2-day high, meaning a high above yesterday, so yesterday and today is 2 days, takes out the 2-day high, it's a long first swing. All right, let's take a look at some of your guys' charts, and we will carry on. Someone asking about Ford. I used to be a statistician for the Ford Motor Company in Dearborn, and it's a great company. I'm a huge fan of Ford, and good people, good hardworking people for the most part. That's good. Yeah, I still love cold. I think cold is great. I cover stocks and ETFs. So about half of what I cover is ETFs. So well, if I had to pick, about 50-50 stocks and leveraged ETFs, high volatility ETFs like this. So this was our trade list from yesterday. This is the actual list and specific alerts that members were given. You can see half of them were wins and 4 of them were stops. So that would have been a stop. These 2 would have been stops. That's win. So I post a lot of alerts that ultimately win if people learn from me and potentially take them. I like UVXY for VIX products. Okay, let's take a look at Zoom. Thanks. That was one of the beaten down tech stocks that I was looking for a play in. That looks horrible here though. So, wake me when it gets over 90. It's a directionless choppy chart, so it's a terrible buy here, in my humble opinion. Why would I trade that when I can buy something that is actually going up consistently like this? It's like an eye chart. Winning stock, losing stock. Okay, so potentially. All right, KWeb. It's up. I don't like that pattern though. It looks like, I don't like this because it's characterized by lots of gaps, and I don't like daily gaps. So that's a gambler's stock. So that's a gambler's stock. So no, just say no, because the gaps are unpredictable. It has lots of gaps. Anything that's a daily gapper is a gamble. So no, we're traders, not gamblers. PSNY. Now that's a horrible chart. Inconsistent, choppy. It's good. The range is good, but it's been plagued by lots and lots of selling. A few days of recent buying does not a trend reversal make, so that's a horrible chart. So you guys are giving me horrible charts so far. Tilray was correct. That's a good one. I'm in that myself. See, that's one I bought yesterday because it's going up. See, it's amazing. I like to buy stocks that actually freaking go up. I don't like stocks that chop around. So Zoom, no. KWeb, no. PSNY, no. Tilray, yes. Okay. Let's look at that LI chart. This one we cover for day trading on occasion, but this is still a terrible bounce in a downtrend chart, so no. US Steel is good. Axel play because it's a nice consistent uptrend, lots of green candles, nice tight, and the range is fine from 19 to 27. So US Steel has my stamp of approval. UNT, that's the worst chart I've seen today. Why would anybody in their right mind trade this? I'd short the 17 maybe. That chart sucks. Okay, VIPS. That's a great chart. Do you see the big disparity? That's why so many different people lose in the stock market is people trade sucky charts and then they wonder why they lose. Well, because I had a magic crossover indicator. The RSI said that I should, and the VWAP said that. No, Sparky. You want things that have trend, consistency, volume, volatility, high vol charts that have directional strength and are likely to attract new buyers. Intelligent people like me. So don't trade stupid charts that are choppy. You'll just lose your money because they don't attract anything but speculators and people that don't know how to trade. Professionals, when we have serious money on the line, we like things that are relatively consistent and strong trending, meaning they're under accumulation. VIPS is a winner. That's a great chart. I think that one gets my vote for the best user chart of the day pick. So VIPS, good chart. I like that. So I'd buy or say, not a recommendation, but I'd say we're 12.3 on that chart. Ford Motor Company has been kind of up and down. I like the recovery here. I still wouldn't touch it till it gets over 16. That's kind of like my waterline for Ford. 25 had been the recent high, and it's pulling back off of a previous resistance area. So this would be an absolutely terrible place to buy Ford. If I were long here, I would trail a stop at say 13, maybe 13.20. I wouldn't touch this until it breaks 16 at some point. So what do these three charts have in common? They're going up. Now, Terry had been down, but it's going up too. So, all right. So good picks, guys. Thanks. We have a few charts to work with. And the more you learn as a trader, the more millions of dollars worth of stocks you trade over the years, the more you realize the difference between things that make money. How to say? The big thing about stock trading and ETF trading is that the vast majority of charts will be kind of chopping around, not consistent from the entry, and you got to figure out what to do with them. And that's why I start small, because that's the nature of the beast. Even though it looks great here, you know, a big percentage of the time, if you buy the high, it'll pull back or chop around, right? So for that reason, trade management is really essential, that you get your arms around how to start small and then scale. You start small. Like I will usually buy no more than say 400 or 500 shares of anything, and often just 50, 100 shares. Little odd lots like Pac-Man, take little nibbles at these things. Like my colleague, the great Tom Sosnow says, trade small, trade often. That's absolutely correct. And I was pleased to see it looks like he does roughly the same volume of trades I do, in like from 50 to 110 or something. That's my range. I trade between 50 and maybe 105, 111 or so trades daily. I trade often and I trade very small. And I don't care about how many 15 or 20 or 30 trades work out. All I care about is what's my end of day P&L? Am I green or am I red on the day? All these darts we throw are just in pursuit of trying to get our nut, trying to get our money out of the market, and then make winning trades that we can then capitalize on by scaling in or adding to them. So the goal is make sure that you do trade intelligently and take a lot of shots at great charts. Good tip. What else? All right, so again, one of the key points I wanted to make today was with our SIBO volatility index cycling up and down. It is currently more than overdue for a bounce to the upside. Come on, VIX. Let's see. The VIX has been going far, far down too long. I 100%, if my life depended on it, I would bet my life that the VIX will pop significantly by third week in December. I bought 1,500 shares of UVXY last night at 7 into the close, just to hedge the bet, right? Or just to play that. I often buy it and then I get stopped out on a move down. Then I try again, get stopped out. Then I buy and then it runs up and then I do well. Anyway, I think that our VIX instruments, whatever you trade, are likely to spike nicely. Remember, the CBOE volatility index always goes up and down. It always cycles up and down. So never in the history of the VIX will it just keep going down, ever. It always, 100% of the time, goes back up, especially after a downturn of this long. So, let's say you're an odds maker in Vegas and you're betting the over-under. You're setting odds on a table game for, let's say one of the casinos is your client, and they're testing on a new table game, and you got to set the odds for the payouts and all that kind of stuff. How would you set odds on this? I would give odds over-under on this. I'd say easy 70% odds, that at least 70%, maybe 75%, 74% chance that the VIX will spike back up sometime within the next week. And I'd say give it a 95% probability of a spike within 2 weeks. If I were to lay odds, I'd say 70. Remember I said this next Saturday when I'll say, I told you so when it's back up at 25. He goes, oh yeah, he was right. I've been doing this for 20 years. I give a 70% chance the VIX will get over 22 by a week from now, from Friday, and well over 90% odds of it bouncing there within 2 weeks. Because the VIX always bounces after this length of time. It's just the common pattern. You can see it. The trick is, are you intelligent enough to take action based on what you see? What you're seeing now is telling you, don't buy a lot of stocks right now. Now, I still bought a little bit yesterday, but very small size. I bought the pot stocks. I bought those. I bought Peloton, just a little bit, like, I don't know, $500 worth, 30 shares or something. Really tiny little seed trades. And if they all crap out, it's not going to cost hardly anything. And if they go up, then I can start martingaling in. Remember I said that, that's the most important and valuable thing I'll tell you this week is the VIX is not going to stay down here past the middle of December. I can't say I guarantee it, but I would be very surprised if that occurs, because it never does, right? It always goes back up. If you look at our S&P, we're still in a downtrending channel. This is still a bear market. By definition, we will not have broken the trend of a bear market unless we get over that peak near 43.20, right? That's the previous. We're lower lows and lower highs. You don't break trend unless you close above a previous high and stay above that for at least 3 days or so. So if we get back over the 4,300 up there, 43.20, then and only then, at that point, then you may want to start putting on size in long positions. But here, it's just do some test trades, some very small nibbles, but don't take big bites of the market just yet. I still think we're headed down before a end of year. We may get the end of year relief rally the 4th week in December. So again, my forecast is choppy down next week and moderate to strong selling 2nd and 3rd week in December, and then a kind of choppy and a little end of year bounce, Santa Claus rally on the end of December. So headwinds ahead. We're in resistance. So play it safe, be careful, and I hope that you guys do well in your trades. Let me know if any questions. If not, I'll just wrap by a reminder here. I do have the whole year with me, and I showed you the example of the real alerts from yesterday and the win rate. You can see it for yourself. That's what I cover, and I teach how to do that. We meet 5 days a week from 8:30 in the morning till 11 and 3:30 to 4, plus FOMC and any other major release days or anything else that's out there. So you can join me for a whole year for just $9.97. That's less than $100 a month, which is a bargain for me. So to get access to me, the link is www.trademastery.com/cyberweek. All right, and that offer ends and will not be extended. It ends in 2 days, so that's Monday. So think about it, maybe give it some thought. And if you have any questions, shoot me an email. Let's see. Yeah, good point. Steve's saying it's getting late to pick big movers on bounces. He's saying getting ready for next sell. Most charts are topping. Yeah, you're right. Yeah. I mean, there could be the exception, but I really honestly believe the market's due for at least a pullback really soon here. So now is not the time to go heavy along the market. It's a time to start carefully making small bets at new highs, but not big bets, putting small chips out there. But I expect which way it's going to go. Let's see. Oh yeah, and a good point from Steven saying it's December. There'll be much tax loss harvesting selling. Yeah, it's another headwind. An economic headwind for today's stock market is that we will have end of year tax loss selling. And to his point, and he's correct, there's going to be a lot of it, because think about it. So many people are in these tech names and they want to capitalize on the capital gains, or whatever they want to capitalize on the tax loss by selling, closing out those positions here into the end of year. So that will exert selling pressure on the market as people want to dump their shares and then rebuy something not too similar, but something maybe in January or February for avoiding wash sell stuff in January. But the point is, tax loss selling end of year is another factor for selling the market. So it'd be great to work with you guys. Do feel free to ask questions, and I will hopefully see you in the live room. Join me for the year ahead. You have my word, it's well worth it. It's less than the cost of what I used to charge and get from people who fly in from around the world. I used to charge $1,500 for a 2-day seminar in Vegas or California or New York or Texas or wherever. This is just $997, less than that for a whole year of daily webinars with me. So hopefully I'll give you good tips and good ideas that can help. And trade smart. Happy holidays. I wanted to wish you all the very best for a happy and safe and sane holiday season. Be safe out there. And let's go get them. Let's do well together as a team. I'd like to see you in the room. And I will see you next time. So with that, I think we're going to wrap up. Okay, so just visit www.trademastery.com/cyberweek. And you too can be among all the people that have joined me. A lot of new members have joined lately. So welcome aboard to all of you who are new, and welcome aboard to those who are considering it. And I'll see you in the room. So take care and bye for now.